Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform on the scan tab, and I'm going to be scanning the S&P 500. So let me go ahead and switch to that and click scan. And this is also after hours data, so it may look a little different when the market opens. So I've scanned the S&P 500, and here we have a sorted list with the highest implied volatility at the top and then descending from there. Right now we have Super Microcomputer Inc. at the top, and it looks like we also have a lot of stocks that have earnings coming up soon. We did look at this one 2 weeks ago, but let's go ahead and take a look at it again since it's still at the top of the list. It has earnings coming out on April 30th, so about a month away, currently trading at $957 about, and has an implied volatility of approximately 94%. Now I'm going to jump over to the trade tab so we can see what kind of premiums this is currently paying out for cash secured puts and covered calls. I'm going to be looking at the 7 days out option, so options expiring the following Friday. As always, I have this custom column on my option chain platform that quickly calculates the percentage profit for selling a certain strike price. So it basically divides the premium by the risk, which in this case is the amount you would need if you did end up getting assigned. And it also gives you an estimate on that percentage profit for covered calls as well. If you're interested in adding this to your own platform, then check out the link in the description that has instructions on how to do that. Now let's start by looking at cash secured puts. It looks like you could make about 1% on this stock selling the 855 cash secured puts that expire in 7 days. This means you would collect about $790 or about 1%. The risk here is if you did end up getting assigned on this position, you would need $85,500 in order to purchase 100 shares. On the covered call side, you could currently buy 100 shares for $95,799. But then you could go ahead and sell the $960 strike price call option and collect about $4,000 or about 4.37% in 7 days. This is definitely an expensive stock with high volatility, so things are definitely just more expensive both on the premium side but also in terms of how much you need to buy the stock. Jumping back to the scan tab, let's go ahead and look at another. Let's look at Illumina Inc., one that we haven't looked at before. Looks like it has earnings coming up on May 2nd, currently trading at about $126 with an implied volatility of about 57%. Jumping back to the trade tab, again looking at the 7 days out options and starting with cash secured puts. Here we can see you could make about 1% selling the 120 strike price cash secured put, which means you would collect about $115 per option contract that you sell. And the risk here is if you did end up getting assigned for each option contract that you sell, you would need $12,000 in order to purchase 100 shares if you did get assigned. On the covered call side, you could buy 100 shares for $12,600, and then you could go ahead and sell the 127 call options and collect about $290 or about 2.48%. Jumping back to the scan tab, we can look at one more. Let's go ahead and look at Carmax. It's one we haven't looked at in a while. Looks like it has earnings coming up relatively soon, April 11th. Currently trading at about $80 with an implied volatility of about 52%. Jumping back to the trade tab, looking at the options expiring about 7 days out. Looks like you can make about 1% or 1.07% trading the $70 cash secured puts, which means you would collect about $65 per option contract that you sell. And the risk here is if you did end up getting assigned, you would need 70 times 100 because each option contract is 100 shares, or in this case $7,000 if you got assigned per option contract that you sell. On the covered call side, it would cost about $8,067 in order to buy 100 shares, but then you could sell the 81 call options and collect about $350 or about 4.5% in just 7 days. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of sorted highest implied volatility stocks in the S&P 500. And if you have any questions, comments, or want to hear my analysis on any other stocks or option strategies, feel free to leave those down below in the comments. And if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next one.